Hello. Good to see you all. Bear Jack was ready to make an appearance. I was I was prepped and ready, but can't do it. You cannot look at this price action and do that. You can't do it. So I take the bear mask off. This is not a bear mask day. Maybe in the future. Huh? Maybe in the future. I have been on my bear train since May or mid-May. We just took a huge step into going bull again. Let's flip to the charts real quick. There's three things. Like, let's make a little text box to be bullish. 1, break downtrend. 2, retest the break. 3, reclaim Wyckoff distro trade range. All right, these are my big rules. This is what. Now you can wait for various points. Like, for example, maybe number 1, maybe that's what you need. Like, maybe you're confident enough. You say, you know what, just the break of the downtrend. That's all I need. That's fine. Okay, we have done that. We've literally done that right now. What does reclaim mean? Reclaim just means re-entering. So whenever there's a level that price comes down to and it loses that level, it can reclaim it as a way to prove to the greater market that no, this is good. Like, we had the opportunity to break down further. We have chosen not to do that. So we talk about trade ranges a lot, like beyond Wyckoff distribution and this and that. We talk about, okay, price memes around breaks and then reclaims. Everybody should know just instantaneously, what is the trade right here? The trade is from one side to the other, and then the increased likelihood of it going out the other side. This goes back to Wyckoff. This goes back to several schools. Even, the Elliott wave guys, all that stuff kind of plays into just the fundamentals of a trade range. What happens if you lose a level and then reclaim it, and how that indicates future bullishness. So we will have a strong bull bias if all we can do is reclaim this level. Bonus points for a retest first. That's what I'm saying. Give me a retest. That's where I enter. A retest that holds. And remember, we know that this goes on to $3,000. So I transported you back in time into January of 2018. I'm using TradingView, their replay tool, which lets me pick a point in time where all we see is that data at that moment, which is pretty cool. But anyway, I just want you to realize why I'm saying the reclaiming the distribution trade range is so fundamentally important, because it is a failure of that is what led us into, we cascaded into a multi-month bear market, multi-year bear market after we failed the retest back in 2018. I mean, everybody kind of knows the remainder of the story. So while the current price action is bullish and the breakout is great and I love it, what I am fearful of, and why I'm saying staying cognizant and well aware of what's happening, is I would hate for this to be another scenario where price breaks out of a downtrend, kisses off the trade range lows, is rejected, and leads to more pain. And then, of course, as we zoom out, we see kind of where that leads on. So this is what I'm focused on right now. I need to know that this is not going to happen. And I'm all in, like, margin long. Let's do it. Grab all your favorite alts. We're going to the moon. And then that's when I'll really start doing all kinds of TA on alts. We'll look at like cloud metrics. We'll do TA, or we'll look at Glassnode's data for alts. We'll do all kinds of stuff. But for now, I need to know that this is not about to happen. The market's got to prove that we're not going to do that kind of meme and send us cascading down. Gotta avoid that. That's why the biggest of my bullish rules is to reclaim the Wyckoff distro trade range. All right, so here, trying to use all the data I have with how the market has reacted to everything. I think this is the best way to look at things right now at this point of time. Go back to the bear market lows of 2018 into 2019. Look at the volume as we break out here. You see this? This was like some of the highest volume. This breakout volume right here was ridiculous. It wasn't like that. It wasn't like that little guy. It was that big boy. Everyone could see it. From outer space, you could see it. Bring that to current. The only big boy the only big boy volume candle we really have to show is this impulse down. And then even this secondary sell-off was bigger. Now it was absorbed, and that's absolutely a fair way to look at it. But the bulls, I mean, people bought hard, don't get me wrong, but it's just not, in the scheme of things, it's not that big of a deal. Now maybe this is just the start and it's gonna ramp up, like who knows, right? But so far it's okay. Is that enough to completely reverse a 30-day downtrend after a 50% drawdown? I don't know. Time will tell. I'm not trying to be perma bulljack, perma bearjack, just charts jack. Just whatever the charts are telling you, that is all I'm good for. That's all I'm here for. And nothing else. I'm not your hype man. You know, I'm not your bear guy telling you to sell.